So hi everyone, Neil Dougherty here, Managing Director of Global Marketing and Communications at SRM. And today I'm excited to speak with renowned credit union strategist, and I'm happy to say he's now my colleague, Mark Sievewright. Mark is a leading voice in helping credit unions manage their strategic planning and digital transformation initiatives. And as you may have heard, not so long ago, SRM acquired Sievewright and Associates, and the result of that move is that we now have the ability to offer credit unions even more forward-thinking consulting services much more efficiently, obviously thanks to Mark being on board. So if you're not familiar with Mark, he brings over 30 years of experience to the table and spent time with MasterCard, Tower Group, most recently at Fireside, where he was president of their credit union solutions division, served over 2,600 clients. So pretty impressive there. And at Sievewright and Associates, Mark has engaged many of the top credit union executives via the Strategic Leadership Series and his Perspectives reports. And that latter piece is what we want to dig into today. So just wanted to say hello to Mark. Good afternoon. I hope all is well with you. How are things going?
Going great, Neil. Good to call you colleague. And
That's right.
yeah, it's been a great journey over the last 5 months or so under the SRM umbrella. I'm very excited.
Yeah, and we appreciate you joining today just to talk through this a little bit. And obviously, we've had the privilege of discussing the Perspectives report that came out in 2022 and kind of your thoughts on what lies ahead for credit unions this year. So I was hoping you could kind of share some of those outlooks in today's chat so that the folks that are watching the video today can kind of get that sort of perspective from you in terms of some of these items. So I'm just going to kind of jump into the questions, Mark, if that sounds good to you.
Sounds great.
All
Sounds
right,
good.
cool. Well, one of the first topics that you touched on in the report on 2023 is the importance of winning market share of millennials and Gen Z consumers, right? And so I was hoping you could shed a little light on that for us and help us understand how credit unions are faring in this critical campaign.
Well, I'm glad you picked on that one, Neil, because that is one of the key strategic issues facing the credit union movement today. As you know, being a marketing executive, the consumer base in America is changing so quickly, and it's driven a lot by demographic change. So we now have two powerhouse groups, as I call them, the millennial group and the Gen Zers. And the millennial group is now the largest living demographic cohort in America, which is kind of interesting, right?
Yeah, for sure.
They've outpaced those baby boomers and Gen Xers. And so now we have a situation where we have more than 70 million consumers who are millennials. And then not far behind, about 68, 69 million, Neil, we have the Gen Zers.
Sure.
And together, this group represents the future of the credit union system. And I think one of the key strategic imperatives for credit unions today is to say, how do we win the hearts, the minds, the wallets, the purses of this massive generation with close to $2 trillion of buying power? So if you think about the evolution of credit union membership, Neil, we have tended to be aging up in terms of the average age of a credit union member in this country. Sure. There was a report just issued by our friends at the World Council of Credit Unions that said the average age of a North American credit union member is 53.
Wow.
Which is 20 years older than me, Neil. So you can imagine how I feel.
Sure.
But the average age...
I'm sure everybody's buying that today.
Yeah, exactly, right? Just color the hair a bit. But the average age is 53. Wow. That's not good news for the future of our credit union system, when the median age in America today is 38 and a half years old. So we have a really big job to do to continue serving the members that got us here, right?
Right.
Those very important members, but now really flip our marketing switch to those younger consumers that we have to win more share of.
Mm-hmm. Well, and you mentioned marketing. Obviously, that's one piece of it, just the awareness and promotion element of it. But I feel like there's got to be some very key kind of digital transformation tasks that have to happen, right? That can no longer wait for credit unions. So I'm wondering if you can kind of fill us in a little bit on that in terms of, again, connecting to the idea of how do we appeal to millennials, Gen Zs, that huge cohort that you just explained.
You hit the nail on the head, because one of the issues for these generations, and they're often misunderstood, Neil, and sometimes they get bad press, right? The millennials and the Gen Zers. Sure. But one of the things we know about them is they're mobile first in nature. And the younger you go in these two demographic cohorts, the more mobile first or digital first consumers you find, right? I mean, this is something that's, I think, well understood. I hope so anyway. And so we have a big job to do in the credit union system by making certain that we've got the digital capabilities that these generations expect. And there's a premium on convenience, ease of use, and speed, right? One of the things these generations share, among many things, is what they look for in a financial provider. Notice that I didn't say financial services institution.
Sure.
Because today, as you know very well,
choices.
There are myriad competitors to the traditional players.
Sure.
And a lot of those are fintech companies. And they really zero in on convenience, ease of use, and speed, because they're able to draw up business models that credit unions cannot do, because they don't have any, the new competitors don't have any legacy systems or any kind of entrenched beliefs of how they should do business. They're working from a clean sheet of paper. And they're designing these Amazon-type, Uber-type experiences, Neil, which younger members, potential members of credit unions really want to have. And the final observation I'd make, and it's a great question, it's probably opened up into several other questions, but is when you look at this sort of digital-first community or population, they really don't care too much where they get that product or service, as long as it does what they need it to do. And so one of the things I'm following very closely is this erosion of banks and credit unions being primary financial providers to these young people. Because what they're doing, they might have an account at a credit union, and many of them do. Let's not forget that many of them do.
Mm-hmm.
But slowly but surely, they're moving their relationship to other providers without closing their checking account at the credit union.
Sure.
It's kind of just like, it's like a slow death of the relationship almost as it erodes toward these fintech providers. And a final comment, I just saw some data that if you take millennials and Gen Z as two groups, between 20 and 26% of the group, depending on whether it's Gen Z or millennials, regard a fintech as their primary financial institution. I mean, that's remarkable to me.
Mm-hmm. Well, it's curious too, right? I mean, I think that we can all sort of share the sentiment that credit unions historically have really done a great job of making connections with their members, right? And being able to bring a certain level of kind of community and, primary human connection, which appears to me, based on data and other survey, information, is something that's still important to the millennial and Gen Z group, right? And so, I guess I asked the question because I know you talk about this all day long, which is like, how do credit unions sort of take what they, their secret sauce and kind of mix that in with some of these, new digital expectations, if you will?
Well, you're on form today, because that's another great question. And I'll tell you, I literally was at a planning session, Neil, a month ago with Credit Union of Southern California. And hopefully it's okay to mention, certainly I have the client's permission to mention it. And they had a theme of winning on purpose.
Right.
It's kind of a nice play on words, right? They were taking the credit union purpose, the mission of credit unions, and matching it to how you win. Mm-hmm. And how you win, especially in these younger communities. So there's a great opportunity for credit unions to connect their sense of purpose, the sort of philosophy of people helping people, with what younger people look for in companies they want to do business with.
Sure.
And purpose-driven organizations are doing really well.
Mm-hmm.
And by the way, that extends to recruitment as well as getting new members.
Sure.
And there is a massive gap, and we talked about this at the planning session, between the buying power of these millennials and Gen Zers, which, as you and I have discussed, is getting close to $2 trillion a year.
Right.
There's a massive gap between the buying power and financial literacy. So the sort of financial awareness of younger people, lack of sometimes, is a massive opportunity for credit unions to focus on financial well-being strategies and leverage their philosophy of people helping people. It's kind of a twin strategy for them.
Right.
And I think that's going to be a fantastic strategic opportunity for credit unions to kind of run into and say, hey, look, we know you have all this buying power. We know, however, that from a financial well-being perspective, you need more education, you need more financial awareness. We're here for you. And not only are we here for you, but the kind of purpose-driven strategies we have should resonate with your demographic. Now, here's the downside. Final comment on this, Neil. Here's the downside. If the digital capabilities are not there, it won't matter. It won't.
Right.
What I mean is, it won't matter to young people. They will say, "I'm still not doing business with you
Sure.
if you don't have those digital capabilities." So we
Sure.
have to have those.
Yeah, and I'm sure that, a lot of the planning sessions that you're working through really are focused on what do we need to integrate, to get us there and to have that conversation be relevant and open up. So I think that's awesome.
Yeah.
Appreciate your insights on that. We could probably go on that all day. Keep talking about some of the different capabilities that need to be, considered, and the, kind of the sequential element of that. But I'm sure, that's for a deeper conversation. But I wanted to just switch slight change of topic here, because I know one of the other things that was in the report that you had published was a hot topic around this, and you mentioned recruiting before, around the intensified war for talent, right? And just curious kind of how you see that playing out for credit unions, where we are in 2023 at this point, and kind of what sort of high level strategies you think credit unions should be focused on in terms of winning that war for talent.
Yeah, great question. So fortunately or unfortunately, Neil, COVID changed everything in the workplace, right? And whilst almost everything associated with COVID is bad news, especially to those who lost their lives and family members, right? All of those things. On a positive side, COVID taught us a whole new way of working. And this movement, which was massive, especially in the financial space, to remote work, was really unprecedented, in my opinion. And so what we're doing now as we've emerged from COVID and we're on kind of this different path, is what's left behind is this question of whether the remote working strategies that helped us through the last few years are ones that should continue on and become a permanent part of the workforce. What I know from work that I've seen with Gallup, for example, some collaborative work done with some clients, mutual clients of ours and Gallup's, is that workplace choice, whether you need to be in the office, so to speak, or whether you can be remote, is a huge component now of whether somebody decides to take a job or stay in one.
Right.
And therefore, I think, in answer to your question, the first priority for credit unions is to establish their workplace philosophy. And I got to tell you, Neil, and this is kind of the second point, many CEOs of credit unions are finding it different to lead in this more hybrid work environment.
Sure.
So it's an alien concept to many where,
right.
like you, I know a number of CEOs who are used to walking around the office, so to speak, and engaging with the team. And that was a big part of how they led, motivated, and communicated. That changed, right?
Right.
We now have to learn new skills and new tactics on how to lead differently. So that's a big issue. And then I think the third point is to say, again, back to the credit union purpose, can that be leveraged in acquiring talent and retaining talent as we move forward?
Right.
If you think about the work that Gallup does all the time in their Pulse survey and so on, compensation still matters. Workplace environment to our remote or in-office environment still matters. You know what the biggest factor still is? Leadership, management. Does someone want to work for who they work for? And so something as fundamental as that has survived the COVID phenomenon and is still either the number one and sometimes number two factor that people use to decide, am I staying in an organization or am I going to join a different organization? So for me, in the race for talent, those attributes are really, really important to get our arms around.
And just maybe a quick follow-up question on this. Do you see, kind of the M&A environment as a potential opportunity for credit unions as well, in terms of, just kind of natural change over time, financial services talent that may be coming from a banking background, or maybe through a consolidation scenario, there's more opportunity to kind of look around at cast a wider net?
Yeah, very, very astute comment, because whether we like it or not, Neil, credit unions are often competing with each other, right? We have a wonderful collaborative culture and movement, and there's lots of credit union service organizations, right? But at the end of the day, oftentimes credit unions are competing with each other in their markets. The thing they also compete around is talent.
Sure.
And so if credit union A decides to merge with credit union B, guess what? There's only one credit union now instead of two that people can work at or join as new employees. And so I think you become stronger as a result of a merger in being able to manage talent. I really do. And I think one of those trends related to your question is that we're seeing the volume really move up now on credit union mergers of larger scale, right? It's not just smaller credit unions. Yeah.
And in your experience, do you feel like, my expectation would be the answer would be yes, but do you feel like credit unions are doing a good job of integrating talent together in those situations and working through that process? Do you think they've become better kind of integrators, if you will, in general, over the last couple of years since COVID?
Very much so. And it's hard, right, Neil, because it's not making it right or wrong, but there's a difference between bank mergers and credit union mergers.
Sure.
And, in a bank merger, they're very driven, understandably, by shareholder return and performance. And oftentimes that means that headcount really comes into play. If you look at the BB&T and SunTrust merger back in 2019, which created this huge organization called Truist, a lot of the $1 billion a year savings that the CEOs promised came from people, right? When a credit union merges with another credit union, invariably, Neil, I don't know what the stat is, but I can't think of too many where this hasn't applied. Invariably, everybody stays on the bus, right? Nobody gets off.
That's great.
And the toughest part of a merger from a personnel point of view is to figure out who fills which leadership spot, on that bus using that comparison. But it's very rare for credit union staff to lose their jobs as a result of a merger. So I do think credit unions have done a great job of integration. Look, we can all be better, including me, at what we do. But I think there are things that credit unions do that philosophically are very much in the best interests of the people who work for them.
Sure.
And I think that's a really good thing.
That's awesome insight. Thank you for sharing that, because I think it's just, kind of a additional piece of the, what would ultimately be that kind of talent puzzle, if you will, right? So we've covered a couple things. We've covered, obviously just sort of looking at the state of the market and the digital expectations of members in the credit union space, talked a little bit about talent, just kind of thinking about now being in February 2023, as you look for kind of the next, topic that you're going to be hitting on these prospectus reports that you're issuing. Have there been any other movements or trends that have caught your attention as critical items for credit unions as you think about ongoing planning or just kind of, future proofing? What are kind of some of the other big items that are in your conversations these days?
Right. And I can't believe it's February 2023, by the way, but that's great.
Here we are.
I think there are two things, and they've been really big shifts over the past several months. One is the race for deposits.
Right.
I mean, here we are. Gosh, 2 years ago, Neil, credit union clients didn't know what to do with all the deposits they were getting in. We had double-digit growth rates in deposits for like 2 years straight. And often, certainly in 2020 and 2021, we had the pace of deposits outgrowing the pace of loans.
Right.
Which is not how this business is supposed to work.
Right.
Now, what's crazy about how fast things change is that we're now looking at scarcity of deposits and liquidity challenges at many credit unions. And one of those trends, apart from the race for deposits, is that a lot of larger credit unions now have had to increase how much they borrow in order to fund their loan business. And so we've seen a very significant increase in credit union borrowings for those above $1 billion in assets versus where they were a year ago. And, look, it's not a marketing plug here, but SRM has sort of various solutions and services like Account Boost, for example, which can really help credit unions and banks drive deposits.
Right.
That's much needed now. And then I think the other trend, which was kind of there, but it's growing, was this willingness to have a merger of peers rather than thinking about, gosh, I'm going to merge in a $50 million credit union into my $500 million credit union. There's now open dialogue, Neil, likes of which I've never heard before, where a $500 million credit union will talk to another $500 million credit union, perfectly financially healthy about getting together. And by the way, above $1 billion as well.
Sure.
We've seen several this year already. And hey, in our merger map service that we have, another plug for SRM, we're working on more credit union mergers of peers that we, of course, can't talk about yet. Sure. Yeah.
Well, and I guess, what just maybe help the the audience understand a little bit more here. What do you think the motivation behind that last piece is?
There's a relentless pursuit of scale going on, and the scale translates into member benefits. So the ultimate driver, at least on the credit union side of the industry, Neil, is how can we better the service and proposition we give to members, but as well as how do we compete more effectively because we're going to have more scale to do more things. We literally just had here in Massachusetts, where I am, 2 credit unions come together who are more than $1 billion each. And both CEOs cited that $1 billion wasn't big enough anymore.
Right. Wow.
Now, I can tell you, I think maybe 15 years ago, when I started my life a little bit longer at Fiserv, if you were $1 billion credit union, you're a real big credit union. That's the term I used to use. I'd say you're an RBCU, a real big credit union. I think it was in Texas or something. But anyway, now a real big credit union is $10 billion.
Right.
Right.
That's wild.
It really is.
I mean, I guess it just points back to exactly what you said, which is that there has been a pursuit of scale that's been going on for some time, and that's going to continue to create conversations and look for opportunities. So I think that's a really good insight, and something that, again, we'll be, I'm sure, covering from a topical standpoint, and you'll be continuing to comment on as the year goes on here. So I appreciate that. I mean, I think we've covered a lot of the stuff that was originally part of your most recent Perspectives report.
Yeah,
I'm glad we were able to do that.
You very much read that report, so thank you.
I did. Well, hey, I want everybody to read that report. And again, I mean, I think that's kind of a great opportunity as well. We're really just scratching the surface here in terms of some of the insights that you can offer. And I would suggest that anyone interested in learning more on these topics, reach out to us about subscribing to the Strategic Leadership Series, because that's where you're going to get these monthly perspective reports from Mark. And so, of course, we'll be able to provide a link here in the video description, and we'll get you to the right destination. So you can contact us here at SRM and at Sievewright and Associates, and make sure that folks who are interested in the Strategic Leadership Series, in these perspectives reports, can have the opportunity to connect with us and make that happen. So Mark, thank you as always. Great talking to you. And I think you're going to be continuing to uncover some really awesome insights this year. I know your work with our credit union partners across North America is going to help us, really understand what's happening, and look forward to hearing more about digital transformation in general in 2023. So thank you for joining us today. I very much appreciate it.
Hey, thanks for inviting me, Neil. It was great to spend some time with you. Thanks.
Excellent. We'll talk to you soon, Mark. Thanks so much.
Okay. Take care.